everybody. Welcome to another edition of the 1Million by 1Million podcast. Today I'm talking to Biplab Adhya and Venu Pemmaraju from Wipro Ventures. Biplab and Venu, welcome to the show.
Hi, Samana.
Hi. Thanks, Ramana.
So tell us a bit about yourselves as well as Wipro Ventures, and let's introduce our audience to the investment activities of Wipro Ventures.
Sure. This is Biplab Adhya. Along with Venu, I co-manage Wipro's corporate investment arm, Wipro Ventures. I have been with Wipro for about 8 years now. Wipro Ventures got set up 3 years back, and since it got set up, I moved from an operating role within Wipro to Wipro Ventures. My background is primarily in the enterprise apps domain in different operating roles before I moved into the investment activities for Wipro Ventures. That's me. Venu?
So, hi, Samana. Thanks for the opportunity. So I joined Wipro Ventures in early 2015, and as Biplab indicated, both of us co-manage Wipro Ventures. Prior to coming to Wipro Ventures, I spent about 15 years at Intel Capital as an investment manager, investing in enterprise software areas and semiconductors. And incidentally, both Biplab and I went to IIT Kharagpur, so there's some common thread that binds both of us.
All right. Great. So let's talk about Wipro Ventures. How big is the fund? What size investments are you making? What stage? Let's get a little bit deep into the investment activities of Wipro Ventures.
Sure. Wipro Ventures was set up as a 100 million fund when we started about 3 years back. Now we must indicate and clarify though that it is not a we invest from Wipro's balance sheet, so it's a sort of an evergreen fund in that respect. Our check sizes typically our sweet spot from an investment standpoint is in Series B type of companies, and though if you draw a normal distribution, B is where most of the investments will lie, though we do invest earlier and later as well. Our typical check sizes, check sizes can vary anywhere between 1 to 10 million. That's our part of the syndicate, but typical median check sizes have been in the 3 to 5 million range.
And you typically follow in a round, or do you lead as well?
Yeah, so we lead if required. We have led rounds within the portfolio that we have. So we have invested so far in 12 companies and in 3 VC funds. So we are a LP investor as well as direct investors. And we lead if required, but in more often the case, we are a participant in the syndicate.
Now, how much of the investment due diligence attention do you put into determining whether the companies that you invest in could leverage Wipro's go-to-market channel?
So Samana, this is a more important part of our investment strategy as well. I think the way you are asking the question, one of the things that we look for, as part of a Series B type of investment is that there is limited technology risk. What that means is that, that the product has been in production and has been deployed at a few large enterprises. Now, given that Wipro goes to market and, services the large global 2000 players, our goal is to invest in companies that would like to, or their solutions are built for that segment. So what we're looking for is that initial product market fit that has been kind of shown or exhibited by these companies. And then, it makes it more relevant for us. So given that, we are an enterprise software company and for us, go to market is the most important part, the product market fit, some proof points in the enterprise segment are necessary for us to consider whether this is an investment candidate or not.
Yes, I understand that. However, what the question I'm asking is a little bit beyond what you just answered. So let me clarify. So let us say we have a company that we want to send to you for investment, and this company already has product market fit. It is already deployed in major customers. So it's understood that it fits your stage requirement, validation requirement, and so forth. Beyond that, how much of your decision making is going to be predicated upon the fact that this product can be brought to market leveraging Wipro's channel?
I mean, that plays a very strong role, but at the same time, we also have to consider quite a few other issues as well. The first one would be who are the other co-investors in the company? Is this company have investors, institutional investors in particular, who have the ability to support this company going forward? That is a very important consideration, and this is really born out of the fact that, as strategic investors, it's quite possible that the company may change its product, we may change our strategies. So it's important that the company have investors who can support it regardless of the future directions of either us or the company themselves. So that is quite important.
Okay.
Second, the fact that they have been able to sell to some of these major customers is a good, is a necessary condition. But what we also need are how this fits within our go-to-market initiatives. Is this an important segment? Is this something that our customers really need? Are there groups within Wipro who are willing to kind of support it and take it to market actively? What are the price points for a solution like this? So all of those considerations also go in before we decide, whether this is a good investment candidate or not. It doesn't mean that it's not a good company. It's just that whether it makes sense for us to kind of pursue it or not.
So let's double click down on that. Let's say we have a company that has a B2B enterprise software focus, has already existing customers, major customers, has institutional investors. At that point, what industry sectors, what B2B industry sectors are you interested in? What kind of pricing or deal sizes are you interested in? What other factors, all these factors that you talked about, can you elaborate on what are you looking for?
Yeah. So, Shramana, the way that we approach this is we are looking for technologies that play across the enterprise technology stack. We're looking for companies, with innovative solutions across the enterprise technology stack. That is because Wipro serves Fortune 1000 corporations across the stack, and that means cloud infrastructure, SaaS applications, cybersecurity, IoT, big data analytics, across the stack.
It's vertical and horizontal across the stack, and you're looking for companies that are catering to Fortune 1000. Is that a good summary?
Yeah, that is correct. And we have so far, we have. If you look at our portfolio, it is primarily, horizontal technology-oriented companies, though they all have applications that are specific to different verticals, and we have really not done an investment in a specific vertical domain, which might happen in the next couple of years as well.
Got it. And what about geography?
So the companies that we invest in must have a go-to-market play in North America. We invest in companies that are, and therefore they should have a leadership presence. Their leadership presence should be in North America. But the origin could be, for example, in our current portfolio, we have companies with headquarters in Israel, in India, and in the US.
So just to add to
That,
that, Ramana, I mean, one of the criterion also is the fact that, this is not just a simple resale opportunity, because if it is just a resale opportunity, it's not very exciting. There has to be an opportunity for us to do some value add services on top of it. So that is, I think that's an important criterion. And also to what Biplab indicated, I mean, given that it is just Biplab and me who are based here primarily doing the investment, although we do have principals in India and here, it is important for us to be closer to the companies. So right now, as he said, the companies may be incorporated in US, Israel, or India, but a lot of the management team is based in the US, and their market presence is also in the US and Europe. So those are some of the important considerations for us. But as we grow as a group, of course, we will expand, some of these, or relax some of these constraints, and invest in companies that are probably in geographies outside of just North America.
so I think the most important thing you just said is that you're not looking for pure resale opportunities. You're looking for extensive value-added services opportunities around the products that you choose to invest in. Isn't that a correct articulation of the nugget that you just
I don't want to say
pointed out?
I think it has to be value-add services. Expensive or not I mean, that is not the criterion. It has to be value-add. How do we differentiate ourselves with value-add services on top of the solution that we take to market?
Yeah, got it. All right. So let's switch the line of questioning a little bit and talk about your current portfolio. What have you invested in, and how did you decide to choose those companies that you have invested in? So if you could take us through a couple of case studies, that would be great.
Okay, so our investment is spread across the technology stack, as I had mentioned earlier. So it is representative of the same. We have invested in four, out of the 12 investments that we have done, 4 of them are in the cybersecurity domain, one in big data lifecycle management, one in business process related to procure to pay, one in a couple of them in DevOps and test automation, and so on, and one in industrial IoT. So as you see, it's kind of representative across the stack of services that we bring to bear to our Fortune 1000 customers. In terms of, and the reason of this spread is, like Venu mentioned, we always try to find opportunities to take these solutions to market through our business units, and therefore our first starting point in scouting for a deal is a deep understanding of our business units strategy over the next 3 to 5 years, and what are those white spaces in their strategy that can be fulfilled by partnering with an innovative company that we can take to market. So that's the start point. And in terms of an example, if you see, we have a very strong presence in cybersecurity, and that is because our cybersecurity practice is a very high growth unit within Wipro. They are looking for innovative solutions. Cybersecurity as a discipline is a very evergreen sector with a lot of innovation happening. And what we kind of propose to our customers is that we want to be end-to-end cyber defense service provider for our customers. And in that context, we have our integrated threat management framework that we bring forward to our customers. We know in that framework there are traditional players that play a role in terms of when we offer our cybersecurity stack to our customers. There are traditional players, but there are very niche segments and very fast evolving segments. For example, in the threat intelligence sector, in the advanced advanced threat detection sector, in security operations and orchestration sector. So in each of these categories, we found a specific opportunity. For example, in threat intelligence, we invested in a company called Insights. In advanced threat detection, we invested in a company called Vectra. In security operations and orchestration, we invested in a company called Demister, and all of them have since then become part of our integrated threat management stack that we take to our customers. So that's kind of, in a nutshell, how we approach our investments. Does that?
I want to ask you one question about the cybersecurity practice of Wipro in particular, and how all these investments play into the dynamics of that world.
Mm-hmm.
And here's the question. So one thing we are hearing from chief information security officers is that they are bombarded with vendors trying to sell them solutions.
Mm-hmm.
And cybersecurity is one of the most active spaces for both startups as well as venture activity.
Mm-hmm.
So there are a lot of vendors who are trying to get mind share with CISOs and CIOs. What is your guidance to this community of entrepreneurs who are trying to sell into these buyers? Because for small buyers, small vendors to get mind share from buyers today is very difficult. How do they navigate? How do you navigate? How do they navigate this dynamic?
So it's a great question, Shramana. And we of course think a lot about it. And in fact, some of our value proposition is actually crafted around the question that you just indicated. I don't know what advice I have for others, but this is our value proposition to the companies that we have invested in and evaluate. Because there is so much noise, the CISOs are also looking for somebody who's a trusted advisor to them, who can basically eliminate some of the noise from the signal. So the fact that we see a lot of the companies in this particular space and have chosen some should give these CISOs some comfort that these are best in class. We're not saying that these are the only companies that are the best or whatever, but these are definitely best in class companies, and we have done a fairly good evaluation of the landscape to come to the conclusion that these are perhaps the right ones for us to not just partner with, but also to invest in. So that is, to your point, that is one of the value propositions that Wipro Ventures brings to these startups. And so far we've been pretty successful in delivering on the promise that we have made to some of these startups. So and it is not surprising that a lot of these cybersecurity startups do have partnerships with resellers or value-added players like us. So it's not surprising. So I think going directly to some of these CISOs is a challenge, and I don't think we have a silver bullet for any one of them.
Yeah. The only thing I would add to that, what you said, is that people have to get to a Series B kind of situation to get a Wipro or an Accenture to adopt them as a solution, and before that, they have to get mind share of at least a critical mass of CISOs somehow, and this is becoming harder and harder to do.
No, it is harder.
Really.
It is harder, and I think this is where also choosing your investors is actually very important. I mean, before strategic investors dive into an investment, it is important to make sure that your early investors do have the reach into some of these individuals, who are managing the security operations of large institutions. So I think it is important for entrepreneurs to look at those investors who can not only guide them in building up a company, but also have the necessary reach into the into the security organizations of large companies.
Yeah. Yep, absolutely. Now, what trends are you seeing in your deal flow? What's interesting right now?
We continue to see strong momentum in our deal flow, and that over the last 3 years that we have been running the fund, of course, through the network of investors that we have worked with, through the entrepreneurs that we have kind of invested in and helped them in the go-to-market promise, as well as our business units who have become more adept in terms of working with smaller companies that they have not been exposed to, that they had not been exposed to earlier. There is a strong.
So my question is actually different. My question is, what trends do you see in your deal flow? So the companies that are coming to you, what's interesting about them? What kind of trends, industry trends, are you seeing in them?
Okay. So what I was going to say is that the deal flow originates from all of these sources, and we tend to see a couple of things. One is that companies that come to us even at a earlier stage show a different, or I would say show a better sign of maturity with regards to what they have achieved versus what one would see a few years back. In terms of the KPIs that they have been able to deliver, the type of customers that they have been able to muster, all of that seems to have, some of the companies that come even at a Series A level versus what they would be at 3 years back, show a different sign of maturity. When
there's no bootstrapping going on, I think, in other words.
Yeah. So that is point number one, and point number two is because of that, the expectation of the size of the round and the amount of money that the company would raise in a particular round, is higher. So that is one type of trend that I would characterize. The other type of trend in terms of the sectors, at this point there's a lot of activity, and at least probably it is also driven by the area of interest that we are pursuing. From a software infrastructure standpoint, from the whole DevOps, automation, cloud, and with all the adjacencies around cloud migration, adoption, we see a huge amount of activity in that space that is of interest to us. That doesn't mean that there are other areas that are not of active interest going on, but probably we are not in investing a lot of time there. But in these areas, we see a lot of deal flow.
Yeah. And what about technology trends? Are there things that, I'm sure immediately you're going to say AI. I know AI is a big trend. Everybody's talking about AI. Is there anything else that you're seeing out there that is worth highlighting?
No, actually, I was just going to add that, you see pretty much everybody, being almost programmed to say that they have AI or ML as part of it.
Absolutely.
So that is something that is happening. The other thing that I think, you're also seeing is, most of these companies trying to focus on automation, ease of use, bringing in kind of, a consumer, what experience type of thing, or a UX, UI into some of these enterprise plays. So I think these are all trends that we see in the enterprise segment. Also, on a very different level, the round sizes are much bigger now than what it used to be, and perhaps it's a reflection of the maturity of companies that Biplab was talking about even at an earlier stage. But I think it's also a reflection of more capital needed now to compete because there are quite a few companies, as you indicated, in each segment. I mean,
each segment if it's a venture fundable segment that has been identified, it's flushed with competition. There are tons of players vying for the same segment. Actually, in a way, the less competition is in the segments that are not venture fundable segments, that are more niche, smaller segments which gets somehow shielded from venture capital, so you can actually build a significant company in that segment without being caught in this intense competitive dynamic.
That is correct.
Okay, well, very interesting. Anything else that you would like to add before we wrap up this session?
No, would love to hear your opinions on, what you see as other strategic investors. How do you see strategic investors? I mean, you talk to a lot of entrepreneurs and other investors. I mean, what do you see as, strategic investors? What should they do more? How should we be kind of thinking about investments that align with, what entrepreneurs would like us to do?
So here's my one take, which is a bit of a continuation on what I said just now. See, venture capital is interested in these billion-dollar opportunities, right? So by saying that you are only going to invest in companies that have significant institutional investors already in the deal, and you want to come alongside them or you want to come after them, you're bracketing yourself into just those kinds of deals that are these billion-dollar market opportunity, TAM kinds of deals, and they tend to be highly competitive. But if you, for a company like Wipro or any other strategic actually, a $200, $300, $500 million opportunity is actually a significant opportunity. And let us say you have a company that is focusing on a particular vertical with a very deep domain knowledge and a solution that solves the problems of that vertical and can rapidly, especially using your channel, can rapidly get to a $300, $400 million business, but it's not going to be a $1 billion company. But it's still a very meaningful business from the point of view of a strategic. So if your goal is to acquire a bunch of, businesses, really high value, profitable businesses, I would not skip these opportunities that do not have large VC support, but are good, solid, mid-sized TAM opportunities. I actually think that those are much better opportunities for strategics than trying to get into the same space those are so competitive. The large opportunities are so competitive and all the VCs want to get into those. I think that's where you're going to run into lots of competition, both from the investors as well as just there's going to be a lot more players. Whereas the heavy domain knowledge niches, which are substantial niches, are very interesting opportunities that my observation is that people are not paying much attention to, and they're better businesses in some ways.
Okay, that's good feedback. We'll definitely, market size is one consideration for us for sure, but I think what is also important is, are these sustainable businesses or not? Because at the end of the day, what we want is sustainable businesses that we can take to a large number of customers, rather than businesses that are quick flip type of a business or not. No,
I think I think you're underestimating how many very interesting multi-$100 million businesses can be built in the niches, because the niches have very specific, domain-specific specifications around which people need to build those businesses, and it's domain knowledge heavy opportunities. So if this for a company like Wipro, I would not ignore those businesses.
Okay, good feedback.
Okay. All right. Well, great speaking with you. And audience, thank you for coming today. Thank you for listening. We will be back with another edition of the 1 Million by 1 Million podcast. In the meantime, please come to the roundtables. And as you know, these are working sessions. You can bring your project there, and we'll be happy to work with you. Thank you again. Bye-bye.
Bye. Thanks, Ramana.